Swayam Prabha. Digital India. Educated India.
Welcome back to the session. In the last session, what we did was, we took a couple of transactions and tried to fit within the profit and loss and the balance sheet out. I took various examples. So, I have taken, you can see that Excel sheet. I have just projected the Excel sheet same again with a pre-income statement and as well as the balance sheet. So, in the last class, what happened? I just started picking up transactions left, right and center, and then started fitting it. There was no organized flow of the transactions per se, but generally more to give you an idea of how the transactions fit into what is called as the balance sheet as well as the income statement. So, that is the basic core idea that with which we started in the first class. You can actually even especially if I sort of look at, I even talked about what are the equity shares, how do you define equity share, what are the features of an equity share in terms of limited liability, in terms of capital gain, etc. The whole thing we did discuss in the last class. So, now I am going to continue this whole thing out here. Let me skip this for the time being and let me take up a set of formal transactions out there. As you can see on the screen, I have taken up a list of transactions of a particular company, and then let us record all these transactions. What I mean to say, let me again rephrase, let us record these transactions. When I say let us record these transactions, let us record the transactions in the income statement as well as the balance sheet, whatever as required. So, let us go over this the set of formal statements out there. I think the statements are for 2 months, the months of April and May of a particular company, that I have just culled it out and then we have prepared it. Let us start recording these transactions so that you understand the concept of balance sheet, the concept of income statement better, the interactions between the balance sheet and the income statement better, and so on and so forth out there. So, I have taken this, and this is also uploaded in your in the drive out there, which you can refer to this particular set of transactions out there. I am going to go over to my Excel sheet exactly similar like this. We will record it. So, I am going to close this, and this is what we have. Now, let us start with, I am just going to make a couple of changes out there. 1 minute, I am just going to make a couple of changes out in this particular case out here, because there is some yeah. Now, let us see, draft the accounting statements of TR Steel Private Limited for the period April and May based on the below listed transactions. They have given you a set of transactions, so you have to record those transactions. Of course, as I had indicated in the first class, we record in a journal, then take it to a ledger, then take it to a P&L and a balance sheet, but we will directly take it to the balance sheet and the P&L and the income statement, so that we understand how every transaction will impact the balance sheet and the income statement. Our purpose is to understand how every transaction is going to impact the balance sheet or the income statement. So, let us see. Now, we will see that Glorified Steel was incorporated in 74 as a family operated enterprises at Chennai. It is in the business of trading steel flat products across southern region in India. GS deals in steel coils and sheets of HR, CR and HRPO. Anybody in the steel industry would understand the differentiation of these three different grades out there. So, I have just mentioned the grades out there of varying sizes. As the second generation joined the business in 2017, they decided to expand the scope by setting up a subsidiary to perform the few operations catering to the current needs of the industry. Thus, TR Steel was incorporated in April 2020. Incorporated means a company was formed, a company was started, the subsidiary was formed, the subsidiary was started in April 2020. Now, let us start with the transactions as of April 2020. 1st of April, incorporation of TR Steel out there, that is, it has started. Now, in that company, somebody has to make an investment. When somebody has to make an investment, that is what we call it as the capital, or what we call as the equity capital in the other class. Now, look at this. GS holds 50 lakh shares of 5 rupees each. Additionally, two members of the family, Tanay and Rishi from the second generation, hold 25 lakh shares of 5 rupees each. Then Tanay and Rishi are also directors, they are drawing a monthly salary, that is fine. TR opened a bank account for receiving the amount invested in the share capital. That means the amount is invested in the share capital. Now, let us go to the P&L and the balance sheet, and let us see how this reacts out there. The balance sheet is as of April 1st, 2020. You can see, that is why I made that correction. It was April 6th. I am sorry, that is it was April 1st. Then the income statement from 1st April to 1st April, because we are in 1st April. Let us imagine that we are in the 1st of April out there, the full day. 1st of April 2020, imagine we are preparing, it is for a period 1st April morning to 1st April evening. So, what does it say? The company was incorporated by what? GS holds, that is Glorified Steel holds 50 lakh shares of 5 rupees each. Now, what is happening? That is an equity. So, now that comes in here as GS's equity holding 50 lakh shares at 5 rupees each, at 5 rupees each. So, what happens? Now, if you look at 50 lakh shares, value of each share is 5 rupees, and this is the number of equity. That is, the TR Steel as a company has got capital. The company owes that money back to the investor at some stage. Equity, liabilities plus equity, equity has come in. Now, the cash has come in. The cash means money. GS has deposited a check for about 2.5 crores out. 2.5 crores. 2.5 crores out there. GS has deposited about 2.5 crores out there, or 25 million, whatever. Now, these 2.5 crores money has come in. It is come in the form of check. The money is received where? That is what I said. They opened a bank account to receive the capital. So, the bank account is opened. Bank account, the money, that 2.5 crores, once the money has come into the account. Account of what? Account of TR Steel. That means the cash, once it is there in the bank account, it is in the bank account of what? TR Steel. So, who owns the money? The TR Steel owns the money. Once TR Steel owns the money, what is it? It is an asset out there. The asset at the stage is basically, this is the kind of asset that is there at the stage out there. They have deposited, GS has given capital, you owe the money back, but it is the hard cash that is there, that is owned by whom? Owned by TR Steel. So, it is an asset out there, simple. Now, moving further, the second generation and also has some equity, Tanay and Rishi. Let us come back to it. Let me again equity. Tanay is equity holding. I'll just mention as T. I'm just going to Tanay. Okay. Tanay's equity holding of 25 lakh shares at 5 rupees each. At 5 rupees each out there. I am just going to format the cells. So, what is it? 25 lakh shares at 5 rupees. Yes, 1.25 crore. Rishi is the other guy. Rishi's equity holding 25 lakh shares at $5 each. Same thing. So, 25 lakh shares at $5 each, that is it. So, all these three form what is called the equity contribution, the capital. Now, this money also come in. Tanay and Rishi has also given input 1.25 crores each. So, where does it come in? It comes in basically to the bank account. The money is deposited in the bank account which is in the name of TR Steel. So, the money of 5 crores is in the bank account of TR Steel. Who owns that money? TR Steel owns the money. That is why it's an asset out there. So, this complete. So, as of 1st of April, when the company was incorporated, capital has been contributed. This is how the beautiful balance sheet will look like. The income statement will look like will look blank, obviously, because no revenue is received or no expenditure has been incurred, and it is basically it's only this. Now one can argue, sir, when the money is coming in, is it not revenue for you? No, it is not. You have not. Have you earned that money? You have not earned. Somebody has contributed in the form of capital, and you are obligated to return the capital at the time of dissolution after selling all the assets. Whatever is after selling all the assets and paying off all the liabilities, whatever money is remaining, it will go. They are the owners. They have contributed what you call it as capital, not revenue. Revenue is what you earn. Now I am going to move on. So on the 1st of April, so you will see the assets will exactly be equal to the liabilities. The balance sheet has balanced beautifully, and then let's go further and read the statement. Now you might say, sir, Tanay and Rishi are also directors drawing a monthly salary of 70,000 each. Yes. When do you draw salary? End of the month. So we are on what day? 1st of April. 30th of April, let's worry about salary. As of today, we are not worried about salary, because as of today, what is the transaction that has happened? This is all. That is only a contract. The contract becomes executable only at the end of the month when you pay the salary. So as of today, no expenditure. That's all. That is a statement which is to be, which we will have to worry about it at a later stage. Then the going further on the same thing. TR hired a factory shed on a monthly rent of about, what do you call it as, on a monthly rent of 50,000 payable at the end of every month. Now, in the sense, what happened? You have hired a shed. Rent is payable when? End of the month. As of today, is there a transaction? No, there is a contract that is signed. No transaction. Contract is different from transaction. There is a contract that is signed that I will pay the rent at the end of the month. Today, when does it become an expenditure? When you enjoy the benefits on and then make the payment, it becomes an expenditure. If you make the payment before you enjoy the expenditure, it's only an advance. So, in this particular case, it is not an expenditure because you have not enjoyed the benefits, and second thing, you have not paid because you are going to pay only at the end of the month. So, let us leave it here. We will all worry about this as we go along. Now, I move to the 2nd of April transactions. I go back to my balance sheet and then say, as of 1st of April, this is how my balance sheet and income statement is going to look like. Now, let us go to the 2nd of this thing. Now, so I am just going to change the date out here, and then on the 2nd, my balance sheet is going to look like this on the 2nd. On the 2nd morning, it's going to look like this, and let us see at the end of the day of 2nd how it is going to look like. And my income statement is from 1st April to 2nd April, 2-day window, 2-day period. The time period is 2 days. This is as balance sheet is as on a particular date. Income statement is for a specified time period. So continuing, as of 2nd, what the balance sheet looks like, what the P&L. Let's go back to the statement out there. If you go back to the statement out there, 2nd April 2020, let's read this. Purchased a decoiling cum slitting machine from ABC Machines, Delhi for 42 lakhs. Let's stop it here. Let's not read further. Let's stop it here. Moment you have purchased a machine, what has happened? Ownership has transferred. When ownership was transferred, that means you are the owner. When you, I mean TR Steel in this particular case, when TR Steel is the owner, what basically happens? It becomes an asset for TR Steel. So what happens? There is an asset, that there is a machine that is bought out there. So I am just going to go back out here. There is a decoiling machine. Decoiling machine, of course, one can always write the decoiling cum slitting machine and everything. So I am just keeping it as decoiling for the purpose of simplicity. It's an asset. What is the value of the machine? 42 lakhs. There's a 5 coming. Sorry, it's 42 lakhs. 1 second. It's about 42 lakhs out there. So the machine is 42 lakhs out there. Now you might argue, sir, for every transaction there are 2 parts. 2 out of the 4, that is asset, liability, revenue, expenditure. 2 out of the 4 will have to be affected. So you have written as asset. What is the other one? Just wait. We'll come back. I go back and read the machine further. Read the statement further. I'm sorry. A shearing machine was purchased for 15 lakhs from XYZ Works, Hyderabad. So what happened? One more machine is purchased. So what happens? One more asset is created. So let us create an asset, shearing machine, for 15 lakhs. Now this 15 lakhs is 1.5 million, that is all. So if you want to read it as million, then read it as 1.5 million. 42 lakhs is 4.2 million. So read it as million if you want to read it. Now I will go back to the other side of the transaction. That is, there are 2 parts, double entry. That's a 2 parts for a transaction. One asset has got affected. Affected means impacted positively. Yes, impacted positively. What is the other one? Other head that is going to get impacted. Is it income? Is it expenditure? Is it a liability? Is it asset again? Let us read this. Based on the parent company relationship from ICICI Bank, the machinery was financed at 40% credit by the bank at 11% per annum with monthly interest payments and quarterly principal payments for 3 years. First, let us say 40% of the value of the machine was financed by bank. Now that means what? You have taken a loan from the bank. There is a borrowing from the bank, 11% interest there. So you have paid and you have borrowed money from the bank. How much? 40% of the value of the machine. So when you have borrowed money, what is it? Liability. There is a liability. That is, let us go back here. In this particular case out here, let's go back to the Excel sheet out here. 40% of the value of these 2 put together, you have financed it from a bank. You have taken a loan to the extent of 40% of the value of these machines and then bought these machines. So what happens? Loan. There is a loan from ICICI Bank at 11%. At 11%. What is the value? The value of the machine is, so it is 42 lakhs plus 15 lakhs into 40% out there into 0.4 into 40%. This is the money that you have borrowed from the bank out there. So what is the other part that is getting impacted? Minimum 2, I said 1, liability to extent of 40%. So the other 60%, we don't know how you have got the money. Let us read the statement again. The balance had been paid by GS in Jan 2020 while placing the order and had to be paid back to the parent company by end of the financial year. The balance money was given by whom? By the parent company. That means you got to give the money back to the parent company. That means what? That is a liability. You owe the money back to the parent company to the extent of about the 60% of it. You owe the money back to the parent company out there in this particular case out there. So what is called as loan from GS for machinery. What is the value? 60% of it is the value out there, that is 42 lakhs plus 15 lakhs. One can argue, sir, why are you typing it every time? You can just copy the cell and then paste it. There is a reason for it. I will let you know as we go along in this particular set of transactions. Why I have specifically typing it, I will let you know as we go along out there. Now, what happened in this transaction? An asset was purchased, asset was created, the asset side positively impacted. Correspondingly, how did you finance this asset? You have financed this asset with a borrowing. So, liability is getting affected out there. So, in this case, what has happened? Two parts of the transaction, one asset getting impacted, another liability getting impacted. Now, one argument most of you will have, sir, when I purchase a machine, is it not an expenditure? Why did you not write it as an expenditure? Why did you write it as an asset? Is it not an expenditure? That is a simple question that most of you will have it if you are doing accounting for the first time out there. If you are doing accounting for the first time, you would certainly have that doubt out here. I said as to why I have, what do you call it as, why I am not recorded it as an expenditure. When does something become an expenditure? Something will become an expenditure only if you have enjoyed the benefits of that money that is spent. As of today, you have purchased. Have you utilized the machine? No. Have you enjoyed the benefits of the machine? No. The minute you utilize the machine, you are enjoying the benefits of a machine. That is when it becomes an expenditure. Till that point of time, it is only something which you own. Supposing, let us take an example. I buy a machinery which can manufacture 10 lakh pieces or 1 million pieces of a particular product. Now, I have paid 1 million or 10 lakhs to purchase that machine. The day I purchase the machine, the value of the machine is 10 lakhs or 1 million, it is sitting as an asset. At the end of 1 year, I have utilized, I have manufactured, I have manufactured 1 lakh pieces, 0.1 million. I have manufactured 1 lakh pieces of a particular product through the year. That means what? I have utilized the machine for manufacturing 1 lakh pieces. That means what is the value of the machine now? The value of the machine is only 9 lakhs at the end of the year. 9 lakhs at the end of the year. That is 0.9 million. The expenditure there, because what? I have enjoyed the benefits of the machine to the extent of what? 1 lakh. That is 0.1 million. I have enjoyed the benefits. So that 0.1 million will come in the expenditure side as value utilized. That is what we call it depreciation. Let us not worry about it. Value utilized 0.1 million or 1 lakh out there. So the day you purchase the machine, 10 lakhs is the value of the machine. It is sitting tight in your asset side of the balance sheet. End of the year, you have manufactured 1 lakh pieces. So what is the value of the machine at the end of the period? 9 lakhs. What is the utilization? What is the benefits that you have enjoyed? 1 lakh. That becomes an expenditure there. So unless you enjoy the benefits, it is sitting tight as an asset out there. Now, how do you enjoy the benefits? That is what is the last statement out here. The machinery would be depreciated over a period of 12 years with a salvage value of so much, and then etc. etc. Salvage value is the value that you will basically derive at the end of the period by selling it as whatever scrap or whatever it is out there. That is what we call it as a salvage value, and this is what depreciation is. The life of the machine is estimated to be 12 years out there. What happens if it works beyond 12 years? There will be no depreciation. It will have whatever is the salvage value, that is the value at which it will remain in the balance sheet. So this is how it is. So as of 2nd of April, if you look at your balance sheet will look like this. End of the 2nd of April, your income statement from 1st to 2nd, it is basically only blank like this in this particular case. That is because you have not had any particular specific transaction per se out here in this particular case. You have not had any specific transaction out there. So it is just like this. This is how your income statement is going to look like, and balance sheet is going to look like. Now let us go to the 3rd of April, and then let us see how things span out to be. 3rd of April, there is an office furniture and equipment setup of 1.5 lakhs were paid to page office solutions. The useful life of these assets is presumed to be 3 years with no salvage value. That means you purchase an office equipment for how much? 1.5 lakh. Moment you purchase an office equipment, what happens? It's an asset for you. You purchase, you own it. That is office equipment. You own it. What is the value of what you own? It is 1.5 lakhs out there. It is what you own. You paid for it. When you paid for it, what happens? The bank balance, what you basically have from 50 lakhs, that gets reduced by 1.5 lakhs out there. So what has happened? The bank balance gets reduced by about 1.5. So what happens in this transaction? Asset is getting impacted twice. An asset is getting, one asset is increasing, another asset is decreasing out there. An asset is getting impacted twice, and that is what we see in this particular transaction. And I forgot to change the date. It is as of April 3rd out there. And then and 1st April to 3rd April, the time period out there. This is how your income statement looks like. Blob, no transaction, no income earned, no expenditure incurred, and this is how the balance sheet looks like. And you will see the sources and utilization of funds are balanced out there. We move further. In this particular case, we move to the next transaction out here. Now please note, we move to the April 4th. The accountant and stock manager were transferred from GS to the books of TR at a monthly salary of 20,000 rupees each. TR also hired 2 foremen for operation of both machines at 15,000 per month. A shed manager with a monthly salary of 20,000 per month. Watchman's salary is set at 8,000 per month. 4 other people were hired for the manual labor on the site at 8,000 per month. They were hired all with effect from 1st of April 2020, and their salaries were paid at the end of the month. Is there an asset? Is there a liability? Is there an income? Is there an expenditure? Well, nothing. All these are contracts. When they have performed their duty, when you become liable to pay end of the month, that is when it becomes an expenditure. As of today, it is all contract. So as of 4th of April, if I go back and take a relook at my balance sheet out there, as of 4th of April, if I go back and take a relook at the balance sheet and the income statement out there, the balance sheet and income statement just looks the same as it was on the 3rd, because 4th there is no transaction that has happened. You have hired people, you have given them offer letter, that's it. There is no transaction. He has not joined, he has not performed his duty. Still, you are not liable to pay. When are you liable to pay? End of the month. If you pay, cash goes down. If you don't pay, you are liable to pay. Liability increases. But your expenditure has accrued. I use the concept of accrual concept. At the end of the month, your expenditure would have accrued if you have not paid. If you have paid, cash goes down and expenditure is incurred out there. Simple. Let us take, as we go along, we'll see all that. So there is no transaction per se that has happened as of 4th of April. We'll worry about all these at the end of the month. Let us go to the 6th of April out here. Received and executed an order from GS for a decoiling and slitting job work on behalf of its customer Dulite for 25-ton CR material to be cut from coils to sheet. It's a long sentence, don't worry about it. Received and executed, you have received the order. If you only received the order, it is only a contract, nothing. It is executed, you have performed the job, that is, the job has been performed. An order from GS for a decoiling and slitting job work on behalf of its customer, and etc. 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 The same was sold by the parent company to Dulite for 41,000 per ton. The payment would be done by GS in 30 days. There's a star there. We'll worry about the star later. Asterisk mark out there. We'll worry about the asterisk. Now what has happened? a job as order you have received and you have executed that order on the 6th of April. Job work. That means what has happened? Once you have executed the order and delivered the order, executed means executed, you have done the job and delivered the job. That means what has happened? There is a revenue that has accrued. Sir, he has not paid. GS will pay 30 days later, no problem. That is where I use the word accrued. So what has happened? Now I go back here. This 6th of April, right? Suhel? Yeah, 6th. My TA is here. TA is called Suhel. So I keep asking him all the time. So 6th of April. As of 6th of April. What has happened? There is an order that you have received, you have done the job, you have executed, delivered it back. That means you have earned. Have you earned? Yes, I have earned. How much have I earned? I have earned job work for GS. I don't worry about whether GS is selling it to Dulite or anybody. I have done the job work. Now, what is the value of the earnings that you have made? Is it 41,000 or 21,000? Please note, GS is selling to Dulite at 41,000. That is none of your business. How much is GS paying you or are liable to pay? How much is GS liable to pay you? Only job work, 1,000 per ton. How many tons? 25 tons out there in this particular case. Job work for GS, for 25 ton job work for GS. That is, let me write 25 ton job work for 25. I think 258 it became. So let me just correct that. 25 ton job work for GS at 1,000 per ton. So what is the value? Value is value is what is called value in this particular case is 25 ton into 1,000, and this is 25,000 rupees is what is the revenue that you have earned. Sir, I have not received it. Yes, you have not received it. For every transaction, I said two things, two heads. Revenue, expenditure, income, asset and liability. What is the head that is positively impacted? Revenue is impacted. What is the other head that is going to be impacted? If you have received the money, your bank and cash account would have gone up. You have not received, you are eligible to get the money. So what is happening? Receivables from GS job work, receivables from GS for job work out there. What is the job work? You have done a particular job work out there. Receivable from GS. What is the amount of receivable from GS? 25,000 is the amount of receivable from GS, and that is the money I am eligible to get from GS. So there is a revenue that is accrued. That is the word that I use. Revenue that is accrued out here in the income statement, as you can see. Since you have not received it and you are eligible to receive it 30 days later, for 30 days it is going to sit as an asset on your balance sheet out there. Now you might argue, sir, the balance sheet does not balance. Certainly yes, the balance sheet does not balance. We will come back to why the balance sheet does not balance out here. Now in this particular case, what happens? There is a revenue, total revenue. There is an expenditure, 0 is an expenditure. Revenue minus expenditure is what? Profit. Now, on the profit, what do? You pay tax. As of now, let's keep tax as 0. Profit after tax is what? In this particular case, because tax is 0, the profit after tax is the same. The profit that is distributed to the equity holder is called as dividends. If I have distributed the profit to the shareholders, the cash goes out of the company. Here I have not distributed any dividends so far. So what happens? The profit belongs to whom? Belongs to the equity shareholders. Profit belongs to whom? Belongs to the equity shareholders. But the money, the profit that is belonging to the equity shareholders, I am retaining in my business. I am retaining it in my business and reinvesting. So, what happens? Imagine you had contributed, they had contributed about 5 crores as capital, all three of them put together. Now, what is their capital? They have got earned 25,000 which belongs to them, but they have not taken it, they have reinvested that in the business. So, what is their total capital now? Total capital now is 5 crores plus 25,000. 5 crores 25,000 is their total capital. Why? Because that 5 crores investment has earned them 25,000, which they are not going to take it. So, I am going to add it, retained earnings. I am just going to add it out there. In this particular case, I am just going to add it out there, and that is what I have basically added out there. Now, what happens? This is what we call it as the net worth of the business. Net worth of the business is a sum of all these is what we call it as the net worth of the business out there. Sum of all this is what we call as a net worth of the business out there in this particular case. We'll come back to it. I know we'll adjust this. That's not a problem. I just have to make it 9. That's all, because I don't want to double count it. So, I just have to make it 9. Yeah. So, what is happening? This is what we call it as the retained earnings. The retained earnings, will it keep changing? Yes, it can keep changing. Net worth is nothing but the total money belonging to the shareholders. I have made it different color. Now, what is the capital? Capital is 5.5 crores 25,000. Sir, supposing it was a loss, what would happen? Wait and watch. Wait and watch. Wait and watch. Supposing it was a loss, what happens? Wait and watch. Now you see the balance sheet basically balances out there. Net worth is sum total of all these. Sir, why have I left a column blank? We will leave it. We will worry about it little later. Don't worry about it. Okay. So, till 6th we have finished the transaction. Now, let us go to the 7th, 8th and 9th and so on and so forth. Now, we go back to the April 7th out there, and let us see. I will read this statement. For future orders, preempting demand from existing clients of GS, TR purchased 95 tons of CR from JS Steel at 41,000 per ton. Another 45 tons of HRPO coils were ordered from TAT Steel at 35,000 per ton. The payment on the order was made upfront to RTGS, and sale by the vendors was executed and received on the same date. That means over, the order is done. That means what? Ownership has been transferred. You have made the payment. Now, let us look at the transaction. First one, let us see. 95 tons of CR was purchased from JS at 41,000 per ton. You have purchased it. It has landed in your shop floor or godown. This is as of April 7. Let us make it as April 7 out there. I am sorry. Yeah, let us make it as April 7, and let me make this also as April 7 out there in this particular case out there. Beautiful. Now, 41,000, yet is you have purchased, let me go back, you have purchased 95 tons of CR from JS Steel at 41,000 per ton. 95 tons of CR from JS at 95 tons of CR steel at 41,000. That means what? You have purchased, it has come to you, you are the owner, it is an asset, that is why I am entering here. What kind of an asset? Current asset, we will worry about it little later. Current, fixed, etc. Now, what is happening? 95 tons at 41,000 per ton. Now, this is what you own it, you have got it, it is there. They said orders was executed, you have received it, everything done. That is about 38,95,000 or 3.895 crore. Sorry, a million. So what has happened? The other part of the transaction, sir, asset is impacted. Yes. The payment on the order was made upfront through RTGS. That means what has happened? You have made the payment. When you made the payment through RTGS, what happens? Your bank balance which was there will reduce by the amount of payment that you have basically made out there, and that is what I have done out here. You can see the formula bar. Sir, why am I not highlighting that particular? I could have just kicked the cell instead of typing it. I said, wait, you will understand why I don't do it. Then the next one, you purchase 45 tons of HRPO steel from Tat steel at 35,000 per ton. That is 45 ton of HRPO at 35,000. 35,000, right? At 35,000. So what is happening? 35,000 into 45. So this is what you have purchased. Yes, I have purchased it. I made the payment. That's what it says, RTGS. So I made the payment. I made the payment of what do you call it as so much out here. I have made the payment of what do you call it as 1575, and then this is a balance out here what I have, and you can basically see your balance sheet will basically sit tight in the process. So as of 7th of April, your balance sheet will look like this, and your income statement exactly from 1st to 7th, for the time period 1st to 7th, the income statement will look exactly like this. Now, are there only one transaction every day? No, I have picked up one transaction every day to make it very simple, and the purpose is to convey or help you guys understand the interactions between P&L and balance sheet. That is the reason how every transaction will impact, can impact the P&L or balance sheet, whatever it is. So this is what it is. Now I go back to the statement out here. 8th of April, registered for an e-auction service for JS Steel with a security deposit of 10 lakhs. You have registered, that's a contract. What is the transaction? 10 lakh rupees from you has gone from out of your bank account to whatever JS Steel as a security deposit. So when it goes out, what happens? As of 8th of April out here, let me correct the date firstly, let me make the date change. As of 8th of April out here, 1st to 8th of April out here, when it happens, first and foremost, what happens? 10 lakh rupees of your money has gone out. Am I right? 10 lakhs? Oh, I made it 1 lakh. I have to add one more zero. Yeah, perfect. Now 10 lakhs out there. Cash basically has gone out, that is why minus. Now it is sitting as what? Security deposit with whom? With JS Steel. Whose money is it? Your money. Your money means TR Steel's money. TR Steel's money is sitting with JS Steel as a deposit. You don't participate in e-auction, that money will come back to you. You don't win an e-auction, that money can come back to you. It is only security deposit. So it is your money. When it is your money, what is it? It is an asset for you, security deposit with JS Steel. So what is the value? 10 lakhs out there. So what is happening? An asset is getting impacted twice. One, a bank account, the balance is going down. Another, your money is with somewhere, asset is getting impacted twice. And as of April 8, this is how the balance sheet will look like, and this is how the income statement will look like. So your money, there, asset owned by you, 10 lakhs, 1 million. With you on this. Now let's go back to the 9th of whatever, 9th if there is a transaction. Yeah, 9th. Satisfied with the previous order service, received a direct order from Duolite for 20 tons of CR cut to their size. The order was executed immediately. The selling price was agreed at 51,000 XTR factory. The payment would be done in 30 days. Now you have received an order, contract. You have executed order, you have performed the job. The order was delivered. How many tons you have utilized? 20 tons of CR. 20 tons of CR. Let's go out here. When you utilize, what is that? 95 tons of CR is there as of now. You have utilized how much? 20 tons of CR is what you have utilized. When you have utilized 20 tons of CR, then what happens in this particular case out there? First, I will utilize the 20 tons of CR. 20 tons goes away. So, what is the value of what is there in your stock? In your stock, what happens in this particular case out there? Whatever I have utilized goes away, It is not owned by you anymore. How much goes away? 20 tons into 45,000 rupees per ton goes away from you. That means it gets utilized. When it gets utilized, what happens? There is an expenditure, that is 20 tons of CR used for Dulite. How much is it? 20 tons into 41,000. That's it. So, what is happening? First thing, first part of the transaction, you are utilizing the material. When you are utilizing the material, what is happening to your asset? Your asset is depleting, and that is what you saw. When you utilize the material, you enjoyed the benefit of the material. What happens? Your expenditure increases. That is what you see out here. Now, next, what has happened? You have sold. Sold for what? 51,000 per ton to Dulite. That is 20 tons of CR to Dulite. So, what has happened? Revenue has occurred. So, you have basically sold it. The third part of the transaction. The first transaction was utilized. So, asset went down, expenditure increased. Second part of the transaction, you have made a sale. Sale means what? You have made a sale to Dulite at 51,000. What is the price, sale? 51,000. At 51,000. Let me put it out here. At 51,000. Sir, I have not received it. Don't worry. Revenue has accrued. You are liable to get it from Dulite. You are eligible to get it from Dulite. Revenue has accrued. So, revenue has accrued out here. So, when revenue has accrued, you are eligible to get it. It is a receivable. Receivable. What is the amount receivable from Dulite? This is the amount of money that I have to receive from Dulite out there. So, this transaction I split into two parts. Now, you see your retained earnings is 225,000. So, what have I done? I have split the transaction into two parts. First part, what? Utilization of the material. When you utilize the material, the stock what you have comes down. That is what we did first. When you utilize the material, the expenditure increase, and that is what we see here. Then when the sale is made, what happens? You earn a revenue, revenue has accrued, and that is what we see here. If you have received cash, bank balance would have increased. Because you have not received cash, you have receivable. Your receivables has increased, as you can see on the balance sheet out there. Four parts of a transaction, yes. I have divided the transaction into two. First, utilization, second, sale. For utilization, two aspects: asset and expenditure getting impacted. For sale, revenue and asset getting impacted. That is how you basically see this transaction out there. So, what has happened? Revenue accrued. Sir, supposing that fellow does not pay, then what do we do? There is a legal course. We will take the legal course. Supposing it does not pay, why do you worry now? Now, as of today, you are eligible to get it. If you are not getting it, then what is worry about it? The day in which you know that you are not getting it. Today, you are eligible to get it. So, leave it there. Now, I go back to the statement out here. Oh, I am sorry, I didn't correct the date. Yeah, this is not as of April 8, this is as of April 9. Thanks, Suhail, for pointing out. This is from 1st April to 9th April as of date. Out here, this is 1st April to 9th April.